one should avoid falling prey to the latest fads within the US technology sector. But at the same time, trying to capture some of the larger trends towards digitization can pay off handsomely for the Indian retail investor. This was a view expressed to us by Mr. Rajeev Thakkar, Chief Investment Officer, PPFAS Mutual Fund, in an interaction with Business Standard. If you find yourself falling prey to either greed or fear in the wake of the steep run up in US technology stocks, watch this interview for some invaluable insights into how to negotiate this rally from someone who has been there, done it all. Good morning, Mr. Thakkar, and welcome to our show.
Good morning. It's a pleasure being here. Thank you so much.
So there is a strong rally going on in the US technology sector. 7 of the top technology names like Amazon, Apple, Meta, Nvidia, Tesla, etc., have added about $3.9 trillion to their market capitalization since the start of the year, according to media reports. The NASDAQ 100 is up about 42%. The narrower NYSE FANG Plus index is up about 72%. And then the broader S&P 500 is up about 19%. My first question to you is, what is driving this rally in the US technology segment?
So I'll take this in two different aspects. Firstly, if we look at, let's say, over the last 4 to 5 years, the way things have panned out, and then I'll take the more specific question of what are the drivers behind the current sharp upswing. The longer term, broader trends have been towards digitization in all aspects of our lives. So whether it's the shift from on-premise computing to cloud computing, whether it be a shift from linear television to the streaming over-the-top services that are there, whether it be the shift from traditional advertising to measurable digital advertising, shift from physical commerce to e-commerce. So all these trends have been longer term trends which have been pre-existing. Specifically, what happened is in the COVID lockdowns, all these shifts got accelerated very, very rapidly. So at a time when people were locked up in their homes, the shift towards e-commerce was almost complete, where physical stores, because of their being shut, could not do any business. So that acceleration in the year 2020 and 21 got reversed in 22 once things started opening up. So the growth rates started looking subdued. So when we are looking at the sharp rally that you referred to, we have to also keep in mind that in 22 there was a big crash in some of these same names that we are talking about. And that crash was because comparatives were looking not so good as compared to 2021 business that these companies did. And the growth rates or all parameters were looking not so great in 22. The current rally is actually recouping the past losses of 22. If you look at the absolute highs, they haven't, the index overall hasn't crossed the previous high that we have seen. So while Nifty and Sensex are at all-time highs, NASDAQ is still not at all-time highs in that sense. So that's just to put things in context. Coming to the current rally, one is all these companies have done massive amount of cost reduction given the challenging environment that they had last year. And plus the new trend of the generative artificial intelligence has caught the imagination of people, where you refer to Nvidia, which is the chip maker for the AI, or you refer to some of the cloud computing names like Amazon, Microsoft, and Google. All of these are benefiting from this new trend towards generative AI. So that's the way I look at it.
Would you say that Indian investors should latch on to this trend, given that the one factor is that trends also tend to change very rapidly within the technology sector. A couple of years ago, there was a lot of fascination for the metaverse. Now it is generative AI. What is your view in this regard?
So definitely one should not buy something just because something is new and shiny and is a fad of the market. So uh, one could argue that things like Nvidia and all have run up very, very sharply. And uh, if the earnings don't catch up, then the current market cap would look very, very expensive. So we don't own it and we don't have any specific view on the company. But one should not just jump into something just because it's the fancy or stock prices are going up. But if we look at the longer term trends towards digitization, I don't think those are changing. So things like e-commerce, streaming media, cloud computing, uh, digital advertising, these are longer term trends rather than something which have just come in and which could be ephemeral in that sense. Uh, but again, coming specifically to the question of AI, while the new generative AI and the chatbot could be a new thing, and people could probably down the road figure out that it's overhyped. But the broad trend of artificial intelligence taking up various things which earlier humans were doing and being able to do it equally well or in some cases better, that thing is here to stay. And I think that trend will continue even in the future.
So, is the current rally peaking out? What is the sense that you get, or do you expect it to continue for some more time?
Yeah. So our approach is more stock by stock rather than taking a overall view in terms of what will happen to the index and things like that. So sure, the run up has been very, very fast, and one has to be cautious about what one is owning. But some of the companies where we have had investments for a quite a bit period of time, where maybe over 4 years, 5 years, 10 years kind of horizons, those trends are continuing. So we would recommend people to buy and stay invested wherever they have conviction and wherever the prospects are looking good and valuations are reasonable. So I don't think uh, the longer term attractiveness of the technology space has gone away. Selectively, things could have gotten out of hand in a few companies. So one should be cautious in that sense.
So are some of these stocks in bubble territory? Is that happening now? Have we reached there?
Some of them would be, yes, some of them would be. So wherever the revenue cash flows have not started materializing, or wherever people are just buying into hope that something will work out down the road, or in some cases the valuations are based on a premise that other competitors will not come in. So sometimes the situation may be that one particular company could have a lead in a particular technology or uh, a particular sphere of activity, but other people are also watching that space, and if it is attractive enough, down the road it will attract more competition. So just blindly assuming that the current situation will continue for next 5 years, 10 years is fraught with risk in that sense.
Does the current rally carry any risks for Indian mutual fund investors? Because our investors are also exposed to this sector through, say, the NASDAQ 100 ETF. There is the FAN Plus ETF. Then there are mutual funds like yours, which invest both in Indian and US stocks. And then there are a large number of fund of funds. So, are there any risks for Indian mutual fund investors?
uh, so Sanjay ji, if you look at the overall size of the mutual fund industry and the limit that we have on overseas investing, so let us say even $7 billion plus $1 billion for ETFs kind of limit, if we say $8 billion limit, now that would be less than 70,000 crores overall in a 45 lakh crore mutual fund sector. So overall, I think people are underinvested in terms of global diversification or in terms of overseas investments. Individual stock portfolio, if someone does not have adequate Indian equity, or if someone has gone overboard in terms of buying a Nasdaq ETF or something like that, then maybe yes. But otherwise, I wouldn't look at it as a systemic risk, because investments overseas overall have been very, very limited, of which a small portion would be these technology related ETFs that are there.
What is your current exposure to the US tech segment in?
We would be having roughly about 17% exposure to US stocks in our FlexiCap fund.
And is there any advice for investors in your fund on account
I
of
think
the
people,
rally?
yeah, I think people should continue with their financial plans and their systematic investments. There's nothing specific to call out for. Uh, as I said, the rally from the bottom looks very, very sharp and quick, but these have not crossed the previous highs that we saw. So it's not at an all-time high. And again, the companies that we are invested in, we look at them as reasonably attractive for the longer run, and we are staying put in that sense.
So recently, I was going through this book called "Where the Money Is" by a fund manager in the US called Adam Cecil. And he used to be a value fund manager, and typically value fund managers would not invest in tech stocks. But he consistently found himself lagging behind, and now he has turned towards tech stocks. And his reason was that you have to be in US technology sector because that is where the wealth is being created. Do you agree with this point of view?
So when we say value stocks or non-value stocks, ultimately what we are saying is this company that we are analyzing, what is the intrinsic value in our estimate, and is it looking attractive based on the current market capitalization? Now, the reason why this myth started getting created that value investors do not buy tech stocks historically has been because people like Warren Buffett and Charlie Munger said we do not understand technology. They did not say that value investors should not buy technology. They were talking about themselves, saying Mr. Warren Buffett and Mr. Charlie Munger, they do not understand the sector and hence do not invest in those companies. Now, with the passage of time, they have Apple as one of their larger holdings in terms of the uh, listed equity portfolio of Berkshire Hathaway. So it's not that they have anything that any rule that value investors cannot buy technology. And in our case, it's not that we have invested in this space in recent times. Alphabet, or earlier called Google, has been there almost since the early days of our fund. So what value investors should do is they should not go overboard in paying for growth or in paying for hype, and they should be mindful of the valuations that they are paying. But otherwise, I don't think there is this blanket ban on technology investing for people who follow fundamental investing.
So just to round off, why should a retail investor in India have exposure to the US technology sector? You already referred to the trend towards digitization. Could you elaborate a little more?
Yeah. So there is this saying which has become very, very popular, which is software is eating the world. So today, almost anything and everything that we do has some sort of a digital angle to it. Now, one need not necessarily buy into so-called tech companies, but one has to be aware that the companies where we are investing in, are they on the right side of the digitization momentum, or are they investing enough in technology to transform their business. Just to give an example, let's say today there is not much of a difference between a satellite television company and a streaming media company. So a Sony Live also will have an app, and Netflix will also have an app. So if Sony does not invest in an app ecosystem and a streaming media ecosystem, then they will get overrun by the trends towards digitization. So today, a Paytm will be offering QR codes and will be offering UPI payments. Now, HDFC Bank also has to be in that space, and their app also offers that. So today, the lines between traditional and digital businesses are getting blurred. Uh, every company these days is a digital company, and one has to be uh, mindful that your investee company should be uh, making the right moves in terms of making their products or service uh, more user friendly and using all the latest digital tools that are available out there.
And do
And
you
because of this, so again, the although Indian markets are quite well diversified, some of the uh, digital opportunities are not there in India. So you don't have the large search engines or the large AI companies or cloud computing companies in India. So for that, some amount of investment in overseas stocks would be a recommended thing from my end. So you don't
do,
have companies like Microsoft, Amazon, Google in India. So yeah.
do you agree with the view that the US technology sector is the most dynamic in the world and one should have a part, a holding in it?
So they are able to attract the best talent to work from them. So it's well known that a lot of the best IIT engineers aspire to work in these companies and get hired in those companies, not only from India. So people graduating from Stanford or MIT will join these companies and develop newer things. So yes, these are very, very dynamic, and they are uh, not only in traditional computer science, they are going into various areas which otherwise would not associated with technology. So autonomous vehicles or self-driving cars, or uh, in terms of genomics and protein folding, or increasing longevity of uh, people, and uh, diagnosing diabetic retinopathy using artificial intelligence. So these kind of things are being developed by a handful of companies in the US, and they are driving the progress in that sense.
I think I've finished with my questions. Is there anything you would like to add, say, especially in terms of asset allocation or not going overboard on a particular sector or something like that?
Sure. So if we look at the last 3 years or so, or especially the last 1.5 years, we have moved away from the situation where uh, fixed income interest rates were very, very low or were in negative territory on a real basis. Today, the uh, money markets and the debt markets have more or less normalized. So people should not be keeping short-term money in equities. So if there is any emergency money that you need to keep aside, or if there is any fund that you need to generate regular cash flows for consumption, then that money should move to fixed income securities rather than keeping that money in equities, because equity valuations have gone up, crept up over a period of time in terms of the earnings multiples and so on. So I think people should take a relook at their allocation, and wherever rebalancing needs to be done, they can go ahead and do it.
Thank you, Mr. Thakkar. It was a pleasure. I'm sure our viewers will gain immensely from your insights on the US technology sector. Thank you so much. Have a good
Thank
day.
you for the opportunity. Thanks.